Hey everyone, welcome back to the Not Financial Advisors podcast. I'm here with Bones Trades. This is Adam Sliver, and today we've got some nice topics to talk about. We're going to go through sort of some beginning options trading type mentality points, advice we'd give to ourselves in the past, things that we've learned from our journey, and sort of the best tools that we think, are the most important for becoming and sustaining, self-sufficiency. Bones, how are you doing this afternoon, man?
I'm doing great, man. I can't complain at all. So, living life. But as Kamish talked about, some very important things that we want to hit on, not only from like, even if you are well in your journey, but some things that we have learned along the journey in order to, make that final step or make the push we need in our journey.
Exactly, man. So if you kind of want to kick us off, I want to ask you, are there certain things that maybe you thought you knew when you started trading options, but you didn't actually know?
Yeah. So I'd say the biggest thing for me would be time frames used when day trading. For me, at first, I really looked at daily levels, and I was trying to day trade off these daily levels, right? But most of the times, I was missing the bigger plays, and so it took some time to really break it down. And now I'm a big fan. I always use the 15, the hourly for my key levels, and then another thing, that I really, kind of struggled with early and really think is great is the mental side. Early on, I certainly struggled, especially with the FOMO. And one thing that I do now is just turning off Twitter, right? Because we see these Weeble cards, 1,000, maybe 500,000, 2,000% gainers, and that's not really realistic. But I was also trading penny stocks when AMC and GameStop were going wild, so that was something I think was formed a little bit from that, but also just from where I was in this big bullish market when I was really, really diving into the day trading side of things.
Right, man. And for me, this kind of reminds me of when in the day am I taking positions? Am I being mindful of, okay, I'm taking it when there's volatility, right? Trading the open, maybe the first couple hours, and then trading maybe the last hour and a half leading up to power hour, right? And trying to avoid that middle of the day lull period. And I feel like when I first started out, I said I can trade whenever I want to because there's always the opportunity to make money. But what I didn't realize is more important than that is realizing when to not trade. Um, and that just speaks to the importance of adaptation, at least for me, because the I mean the market is very different now than it was 3 months ago, right? You see all these names in November, they're all at highs, and since then a lot of names are down 50, 75%, some crazy numbers. I tweeted this morning about skills being below $4, which is nuts, thinking that it was almost 40 in February, right, a year ago. Um, it's for me, adaptation is something that you constantly need to be aware of because if the market acts weird for 3 days, you tend to forget. Say it's more of a scalper's market, super, buying on support, selling on resistance, right? There's no breakout or breakdowns really happening, no follow through. That happens for 3 or 4 days. You're going to forget what follow through even looked like. You know what I'm talking about?
Yeah, absolutely. Another name that you mentioned skills. Another couple names to stick out right off the bat are Roku and PayPal. Right, like these are down 70-ish%. Like Roku's $100 name right now, and it was 300-400 easy at times. PayPal, another one. Like when I lost a ton of money on PayPal, it was at $300. Right now, it's fighting for that 100 level. So that's insane.
Square's another one down there that I love to play. Yeah, it's crazy. So, seeing all of this and taking it all in, Bones, what's maybe some advice that you'd give your past self, given kind of stuff you know now, and but recognizing that you're still learning the process. And same here.
Right. Yeah, right. So I'd say the biggest advice I'd give to myself is develop a set of rules and a system, as I'll call it, or a strategy that can help to maintain this profitability in any type of market, right? Like being able to play both sides, as you talked about adaptation, especially in this market, where puts are, it's looking pretty bearish. There's war news, stuff like that. Being able to play those put side is very, very advantageous, not only to being profitable, but also keeping up that mental health that we talk about a lot. Seeing green, taking green is much better than being red. I think the biggest piece of advice I could give myself, though, was not be greedy, right? Like seeing those things on Twitter, the 500%, 1,000%, that would get to me and be like, oh, I suck at trading because I'm not getting these massive runners. Like maybe I'm capping at 25% and it could have gone 300. I think, just realizing that um, taking profits is going to be way more advantageous in the long run than holding out for these big time movers. Because most of the time, I feel like if I do get a big move, it's on the play I don't expect to move as much as the others. So really, just getting in that mindset and really sticking to the risk management, sticking to the scaling, and just remembering to take profit has been a big thing for me, which something I still at times get a little bit greedy. So that's something I'm still working on to this day.
That's a great point on greed and making sure you don't woulda, coulda, shoulda trade, because the only thing that that does for you is it's detrimental mentally. And I'm usually not a woulda, coulda, shoulda type person. I'm happy with what I got, right? It's just it's been weird lately because you're either super on or you're off heavy. And at least recently that's sort of what I've noticed. And I've felt off on some days when people I know had the best day that they've had in a month. And so, does that feel weird? Yeah. Does it give me maybe a little hint of woulda, coulda, shoulda? Maybe. Okay. Is that impacting the way that I'm scaling, seeing green, taking green? Maybe. Just need to be aware. So, I wish I I would tell myself, 2, 3 years ago, I'd say, spend more time acknowledging what you don't know instead of pretending or expecting that because I'm looking at a screen and, observing this on a daily basis that I do know. And so the way that I look at it now is like I'm not hesitant at all to admit the fact that there is so much that I don't know. However, I like to consider that I'm good at doing what I do, my niche, right? I like to find intraday levels and set up a game plan based on a set of rules, just like you addressed. And that's my style. And putting that together took a lot of time. And so acknowledging that it's not really possible to know everything and to stick to one thing and not try to be Superman every day and be a hero, right? I think it's super important to realize what we don't know. Um, but more importantly, what stuff from the past do I still mess up on? What habits do I have today that were formed or maybe influenced by stuff that was a struggle in the past? And for me, it boils down somewhat to impatience. I like to be very quick in my trades. However, if I hold something longer than usual, I end up holding it for too long. And then it's kind of, oh, either you're stuck in that hope mentality where it's like, okay, well, it better go my way or else I'm bagged. Or, um, you mess up 1 second mentally, or you have one little lapse and suddenly you're stuck in a really bad position. And, you just can't help that. We're all human. Right, but one bad mistake can lead to something like, okay, I had a big loser on accident, what if I chase that? Or what if I size up to try to get back green? There's certain things that it's sort of a spiral of events. And what we need to do is recognize the spiral that could be happening and then adapt. And so I'm sure you can relate, Bones. What are things that maybe you do in order to try to conquer this spiral and catch it before it happens?
Yeah, so I'd say, the biggest thing for me would be both playing both sides. And then if I do have one bad trade, or maybe, I enter pretty bad and realize it after the fact, if that's the case, cut those early. Just because most of the time, if you're terrible entry, right, you're going to lose a decent percent. Even if it does, shoot back up, it's probably going to have a nice effect on the mental game right there off the bat. So I think the big thing is, just stepping back after maybe you traded bad. A big thing with, especially me to this day, would be revenge trading, right? So say, I lose 10% right off the bat and I thought it was a good setup, knife, whatever. An example of that for me of late was NVIDIA about a month ago. I tried to play it like 20 minutes off open. It closed above my key level, so I took calls, right? Absolutely knifed. I ended up going down like 27% right off the bat. I couldn't even put a stop loss in, it went so fast. And then
Yeah.
the next candle dropped from like 282 down to like 276, 275. And if I would have stayed in that play, that would have, that's gone. It doesn't matter where I was at, that's gone. So just realizing, stepping back, maybe you do have a big trade like that, and just take some time to really, recuperate. Make sure your brain is still going with what you're seeing, right, and keeping the bias out. Another thing for me is, when I do hit my daily goal, or maybe I've traded bad, so I'm gonna step away for a little while, just shutting the screen, not getting on Twitter for a little while. Just let your brain, let your body refocus a little bit before you try to get back into things and make that money right back. I think that's, absolutely huge, right? We see, maybe it's a minor paper cut. Maybe we had a terrible trade, as NVIDIA for me, but taking that time to really think about it helped me a lot, because after that, I don't think I traded until power hour. And this was at, say, like, I want to say about 9:50 a.m. So that's an entire day, but it took me that long to even realize, why did this play mess up? And it was just simply because I had bias. Like, knives are going to happen. So I wasn't fully mentally ready to get back into a play. So I just sat out for a while, shut my computer, put my phone away for a little while, and just kind of thought about what went wrong and how I can fix that. But I wanted to make sure that I didn't revenge trade, because most of the time, that ends up hurting me a lot. So that was a big thing for me.
Hmm. That's really good. And I agree with you. It's something, some sort of forceful action that we need to take, or know that we could take if we get to a certain, point in our head. We have something happen. Okay, maybe that's a trigger. Okay, then what actions do we need to take following that? I think you make an incredible point. For me, I want to add on kind of a little bit differently, but when it pertains to account size, or maybe keeping gains, I've talked to a lot of people about this, and I've done this in the past. And as far as how to, because, say you make a lot of gains and then you start to get a little bit reckless just because of it, your account size is bigger. Does that lead to recklessness? I think yes, it can, at least for some people. And so I think an important thing there is twofold. Number one, paying yourself and maybe resetting back down to a certain baseline, so that you're not only respecting, this is not just a number on a screen. This is an actual dollar that can go into my bank account. Um, but rewarding yourself, saying, okay, this is coming out, and then also resetting back to some baseline that it says, okay, this is my stake in the ground. I'm either up or I'm down. It's sort of, you're not just up and you have money to lose. You're not, you're playing with house money, I guess, but we shouldn't look at it like that, because we're going to be upset if those gains go away, right? So
Absolutely.
just like you were saying, do whatever it takes to hedge these behaviors, whether that's you literally shut your computer, or you withdraw money on a regular basis and you have a set plan for that. Whatever it takes to remind yourself, if you notice that you have some form of trigger, or some form of thing that makes your mind go to certain places, take those into account and then take the proper action. Bones, do you have anything else to add on this subject?
Yeah, actually, a little bit. Nothing too crazy to add. But another thing I think about is when, really realize, when do you personally trade the best, and then try to get back into either that mindset, that place, whatever it is that helps you really optimize your trading. I think that's a really good way to, reset after maybe a bad trade or a series of really good trades, and you feel like, you have more money to gamble in a sense out, or you're more reckless with risk management, stuff like that. Find that place, that mindset that you are really confident in your trades, and you feel like, I can trade no matter what ticker it is. I can trade the price action and I will be profitable.
Right. Right on, man. Yeah. So what if you could say things, what are some of the biggest things, maybe one or two things that you have learned along your journey? That maybe it's a recurring question or a recurring theme or a recurring topic that comes up in your head.
Right. So I'd say the first thing is going off of risk management. Risk management pays off. And more importantly, on that, I think personally, risk management is more important, or one of the more important aspects of trading, just because trades will go bad on you faster than they go up, or so it seems. But just really that, and then along with risk management, I would incorporate scaling. Green is green, right? Take profits. This was something hard for me to learn, just because of that greed factor. We talk about it a lot. It definitely happens to me to this day. But having this set of rules, when I'm going to scale, pre-planning out a trade can really help a lot. And once I've, scaled my 2/3, or however much you do scale, that last maybe 1 to 2 are just runners. Let them go, right? Like, I can put my stop loss at break even theoretically, and I'm still in the cool. Like, I made money. And then secondly, um, I mean, there's a bunch of different aspects that I'd say I've learned along the way, but I think, building your own system and being able to be self-sufficient really pays off more in the long run than it does, taking alerts or whatever it may be, right? I just think the ability to become self-sufficient is more rewarding than you think.
Yeah. And to clarify, there's nothing wrong with taking alerts, believe me. I still do it. I still do it sometimes. But there's nothing wrong with that as long as you're owning the outcome. Don't blame the person who called it and they're like, "Why did you bag me?" Come on. Everybody, but this leads me to like a very important point is, you know, learning to just own it is extremely important. It's a great tool because not only does it forces you to be in the mental state where I am in full control and I am the one in charge of this. I'm not waiting for somebody to tell me when to buy and when to sell. Right? We should analyze each and every possible position before we enter. Right? We need to have our own reasoning and our own thesis. Therefore, if that thesis becomes invalid, we can get rid of it, right? Or if our thesis works out, we can sell. We're not holding for 3,000,000%. We'll sell for 25, right? We can do that on our own. I mean, it doesn't have to, you don't have to be a genius at technical analysis, but you can know how to just use the probabilities in your favor. I'm cutting at minus 10 to 15 and I'm uh, cutting at plus 20, right? Just having scales and having stop losses, just owning things. So on top of that, it recognizing that everybody sort of thinks a different way, and this kind of goes back to a topic that you brought up earlier, was seeing these gains, whether it be on Twitter or wherever else, seeing these plays that you missed out on maybe, and being like, why wasn't that me? Well, it helps me to think like, okay, those people had to think through their own process. Like, there's a reason that I missed it. Those people were either they planned or they had some sort of process that they went through in order to get that. And who's to say that you would have even done the same thing, right? Of course, we all see 1,000% gainers, but was that one contract? Was it 10? Was it 100? Great. I'm happy for him. But the chances that I would hold that long are basically none. So the FOMO shouldn't have any effect.
Absolutely. To kind of go off that, another thing that I think I've really learned along the way is playing price action over bias. And we talked about this last week a lot with, our biggest losses. And the similar theme there was we went into the play with a strong bias, right? So being
Hmm.
able to play price action, play both sides we talked about earlier, is really it not only helps our overall trading, but it also helps the mental side of things. We can see things a lot more clear if we come into the day without a bias towards one side. I mean, me personally, I am pretty bearish of events and things that happened on Friday, right? But going in Monday, I'm going to have this mindset that plays can go both ways. If we have, a nice green day, perfectly cool. I can play calls, right? But if we're another sell-off day, more red, I'm perfectly fine playing puts too. The ability to play both sides and trade price action will, it's way more valuable than one single indicator. And that's a big reason on my personal chart. The only thing I have on there, besides lines I've created, are VWAP and VPA. I like to keep it really clean, and the reason being, most of the time indicators are laggards. I want to trade what's in front of me, and I don't want to be relying on a indicator to enter into position, right? So that's why I think key levels are something I really really value. And just a clean chart, it really helps me think a lot clearer about entering into a trade.
Hmm. I like that. I like that a lot, man. And for me too, I don't, if I use indicators or too many of them, for me, it catches me looking at stuff that isn't necessarily what's physically unfolding in front of me. I'm looking back. I don't want to look back. I understand that, but again, everybody thinks differently. So for me, I can't use stuff that, or MACD or any of that. Like, believe me, I've used all the indicators and I know what they do, and they work for a lot of people. But personally, it kind of takes my focus. It's all about the focus. It's just like tuning the noise out on Twitter, right? If you need to, and you need to just take the noise off, so that you can focus on what you're thinking and what you're going through. That is important. So for me, blocking out the noise looks a lot like having my lines on the screen and having some pretty simplistic indicators, right? Which I just did a YouTube video on. So that's huge for me. Yeah. That's huge for me.
A little
So,
subtle pump, whatever.
Bones. So becoming self-sufficient, what would you say are the biggest assets that you need to have when you're working toward that?
Yeah,
Other than
first,
other than putting together a set of rules,
right.
which you've
So
already
I
said.
say the first thing is, thinking with a clear mind and not taking, an alert, something like that. I mean, you can take it, but if you do, due diligence, DD, whatever you want to call it, right? If you, take the alert, at least know the why you took it. But becoming self-sufficient really, I think, centers on having a plan and a strategy that you can replicate every single day in order to help yourself become profitable. For me, that's flow, creating a watch list, and levels. Other than that, it's just trading price action. But the main thing for me becoming self-sufficient is looking at my own plays, my own levels, and knowing why I enter into a trade. And I think that's actually paid off probably the most for me is just the why did I enter. Even if I lost, go back at the end of the day or whenever you take time to review your trades and realize, why did I lose? And a big thing, for me early on and still to this day is that impatience part. And most of the time it's like, I see a hammer candle and for some reason I'm like, oh, wow, it's going to tank. I don't know why it's emotions. It's just me, I guess. But then right after it shoots back up, it's like I clearly saw this. Why didn't I enter it? And then I enter at a very awful spot. And then I'm just burned right away. And when I do trade bad, that's like the one thing that gets me every single time. And just, it pisses me off, to be honest with you. It's just like I saw the price action. Why did I not enter? Like, and that for me, it's just that mental side of the game. And I still struggle with that to today. And it's, a very, very hard part of trading. So finding ways to curb that, but also finding your own system that works for you. As Kamish said earlier, everyone's different, so find whatever works for you. And a big piece of advice I actually got from someone the other day was, we were talking about indicators. He reached out, asked me about an indicator, and I was like, indicators are cool and all, whatever. Like, does it work for you? He's like, yeah. And then he said, my favorite thing is, I don't have to worry about other people's thinkings, but this indicator works for me. And at the end of the day, it's whatever works for you, right? Like one thing
Hmm.
may work for me, one thing may work for Kamish, but it could not work for you. So finding that system that helps you become profitable is, that self-sufficiency thing that we are talking about.
Right, and what works for someone else, just because it works for them and they're really good with it, doesn't necessarily mean it's gonna work for you. It's kinda, the conversely, right? I think the biggest for me, 2 biggest assets are number 1, tuning out the noise. Just like I said, gotta be able to regulate yourself, be self-aware of what you're thinking, what you're feeling. Tune out what you need to tune out. And then second, having personal conviction. Trusting yourself, because if you don't trust yourself, you're not going to act on your intuitions. So whether that means trusting your homework, whether that means trusting your levels, your intraday levels, your analysis of intraday indicators, right? Having that personal conviction and then having that plan set up, those two things, tuning out the noise, having your own personal conviction, those 2 things have gone a long way for me, and my best recommendation for how to get there, how to build up this confidence in yourself, is to just try it. Just give it a try. You might think, "Why? Who am I to do this? Who am I to put a line on the screen and then trust it?" Just do it and observe. Observe behavior, and then use what happens to teach you. Because the best way you're gonna learn is trial and error. Trial and error over and over and over time. That is what will help you build up this confidence not only in yourself, but in your system. And I think Bones would attest to that as well.
Oh, absolutely. Another thing I'd say to go kind of off that is there's a difference between having confidence and having bias. And that's one thing that I think you'll start to incorporate and really learn is once you observe how a ticker reacts, you kind of get this sense of, was I confident in the play or was I biased? If you're thinking, how did this go wrong? Like, how did a knife happen? All this type of stuff. Most of the time that's going to be that biased side of things. But a confident play would be, you're confident in your risk management. You enter in, maybe at knives, cool, you have your risk management in there, and then you're able to rebound. It doesn't affect your mental game because you do have that risk management, and you realize, knives are going to happen in this game. Like it's part of it. But being able to respond from that and realizing, my levels still work, my system still works. It just had one bad trade. Like one bad trade doesn't deteriorate your entire system or your entire strategy, but it helps to make them better and then adapt that strategy towards whatever you see, right? And this can really really help you. It's helped me a lot, because I was taking trades off daily levels early on, and that a lot of the times I was seeing a lot more nice at those levels than I do now. So that was something I definitely had to learn personally.
Fine tuning an adaptation and trusting yourself. I think you're 100% spot on, and not getting disappointed by one decision that goes wrong or one trade that doesn't go in your direction. I mean, we're not guaranteed a single thing. We're just playing what's in front of us. If it doesn't work, then we move on. If it does work, then great, move on. Either way, we move on.
Absolutely.
Well, Bones, again, this has been a total pleasure. Very glad to do this. I think we covered some awesome topics, and everybody, we're going to be back here a week from today. We're planning to do them every Sunday. So I'm looking forward to the next one, man. Thank you for hopping on and speaking with me.
Oh, of course. So it's always a pleasure, Kamish.
Well, have a good day, everyone, and thank you for tuning in.